Hello and welcome to another update video about gold. We take a look at the gold futures chart. Gold delivered a good performance, reacted to our support trading area here once more, but it is not enough to confirm that an overall low is already in. So we're going to take a look at the different possibilities in this video. Not much happened overall. I mean, good performance here in the last few days, sort of, towards Friday, Wednesday it started with a small rally. But it hasn't broken any high, and the rally is not yet clear enough to tell me that a more substantial low is in place. It is, however, too large, too substantial to be considered, for example, part of an impulse to the downside. But I'm considering anyway this as an ending diagonal, but I mentioned that before, so we can take a look at that. Overall, still quite bullish on gold also in 2024, but obviously we are clearly in a correction at the moment that first needs to complete before a C wave to the upside can continue to unfold or can unfold. The idea is that we are in a third wave, which is typically the most aggressive rally in an Elliott wave cycle. Wave 2 likely bottomed here in October last year, and this is a third wave, and I'm counting that as an ABC structure. Surely there are many other wave counts that are applicable here, that are valid. Most of them lead to a similar result, the bullish ones. Basically, the idea of this is that this is overall, since the swing low that formed in November 2022, that this is an ending diagonal. And because of that, it just tells us we need to be flexible, more flexible. Yeah, it's not impulsive. Diagonals indicate that, yeah, we have to prepare for wave count changes, changing scenarios. When we look at the microstructure, at least, sometimes we may have to deal with pullbacks where we don't normally expect them. There's just something to warn about, just due to the scenario that we are here in a fifth wave overall in the larger cycle. And therefore it can be an ending diagonal. And the three-wave rallies that we've seen, which can be interpreted differently, yeah, but for me that's a very clear three-wave move. But they indicate that there's a diagonal. I just warn us, basically, okay? Also, due to the idea of a diagonal, because we have corrective structures there, you will get different wave counts from different people. It's not a clear impulse. Because it's not a clear impulse, it means that there is room for interpretation. But that's why we use the Fibonacci levels, because they put the objectivity back in. And they tell us very clearly when we have to be, let's say, when we have to get more bearish, or when one scenario, for example, breaks. So for example, here when we go to the 1 hour chart, as I just showed you, we are likely in the B wave of this third wave. The B wave consists of an ABC structure, A, B, C, and we could be in the C wave in an ending diagonal. Not entirely clear yet, but if that's the case, the price should stay below $2,067, yeah, below the wave 2 high, basically wave 2 in wave C, and that's a clear invalidation point. That's very objective. Okay, so I can tell you I'm leaning towards the idea this is an ending diagonal, but we know that above 2067 I have to change my assumption. But I already presented you in the last update with an alternative, and it would simply be that this B wave then extends. So what would that mean? It would mean that, yep, the idea is circle wave A of wave 3 indeed topped here in December. Then, yep, this was the A wave down of a larger B wave of wave 3. But then the B wave, even though it respected nicely our resistance area, it never finished and is morphing into a larger B wave, which can always happen in corrections. And then we come down in the wave C. That would be my alternative that I would explore first if the price breaks above that $2,067 level. Yeah, it's an absolute reasonable alternative, and there isn't even, it's not even the case that I say the C wave down, this is what has to play out, okay? Especially because this is not an impulse down. We have to prepare for changes. Now, best I can say about this microstructure, if we're really in an ending diagonal, then this here would be an A wave, this would be a B wave, and this move down a C wave. And I think in the next week, we get a decision here, because this B wave that you see there, let me just change the wave degree. So this B wave of wave 3 is now rallying into resistance. So obviously market respected this resistance area, market respected this resistance area. Let's see if it also respects the next one, because if this is now wave 3, the price should really not break above the $2,054 level. I just gave you that level at 2067. Well, that's the clear invalidation point. A break above 2054 will be a warning that this will lead to invalidation. Okay, so for now, I'm leaning to the idea also because we have an initial reaction to that resistance area and the market is that B wave is respecting the Fibs. It indicates the C wave down could have started. If that's the case, I need to see a break below $2,005, the Wednesday low, to confirm. And the next support is down there at 1988. That's sort of what I'm watching for, the parameters I'm watching next week. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.